Good evening, good morning, hello, welcome back to the Perpetualpips podcast. This is episode 6. I hope you've been so well. This one is titled Trading vs. Analysis, and we're going to be taking a look at analysis, trading. We're going to be taking a look at, also be taking a look at entry and exit strategies, fundamentals, emotional weight of trading, numerous TPs, and risk. No, this one will not be taking on any analysis for the week. But yeah, I'm so glad that you guys have been rocking with me these past 6 episodes. Thank you so much for tuning in. Once again, if it is your first time, take a look at the first episode on YouTube. I got 2 episodes on YouTube. You can search Perpetual Pips. You can get episode 126 right here on Anchor. You can get it on Spotify. You can get it on Apple Podcasts now. You can get it on Google Podcasts. You can get it on Breaker. You can get it on Pocket Casts, Radio Public. You can also get the first few episodes on IGTV. Now, I will be uploading the episodes more frequently on the podcast platforms. YouTube and IGTV will be getting it a week to 2 later. For example, this coming week I'll be uploading episode 3 of the podcast on YouTube and IGTV. So if you want the latest, stay tuned to wherever you get your podcast. Anyways, let's get it. So let's chop it up, guys. I hope you guys had a great week, a great trading week, and a great week in life. Mine was the latter. It was one of those red weeks, more L's than W's. You go through it as a trader. Warrior mentality, hashtag that. But yeah, you guys hit me up on Twitter at Perpetualpips. Let me know how your week went. Let's get into it. So, as suggested in the title, trading versus analysis. A lot of beginners don't even understand this. Maybe some novices don't even understand this as yet. And this is something that you get from experience, right? You could analyze a currency pair to do a certain thing. A currency pair, a stock, an index or something like that. So, you could analyze, definitely. But analysis is quite a lot different to the actual trading that goes on. Analysis simply involves you putting down what you think is going to happen based off of your knowledge, based off of what has happened on the left side of the chart, previous price points and all that. And then it comes to trading. You could plot a TP. You believe that price is going to short to a specific price point, and you plot your TP, right? And then you enter the trade. Now, if you just follow your analysis, right, you may find that price does go down, but you don't then manage the trade. So you find price goes down and you feel like, oh, you're in profits, and you don't manage the trade. You come back an hour or two or a day later, and you find that price went just before your TP, pivoted, turned around, and went straight to SL. Right now, you've lost money, and before you saw your trading platform, you saw that you were in the blue, and then you end up taking an L. That's because your analysis went great, but you didn't manage the trade. What was supposed to happen is you were supposed to then put a trailing stop once you were a certain amount of pips in. If you were going for 50 pips in the trade, once it was 10, 15 pips in, you're supposed to move your trailing stop to break even. So that if price does pop right back up, you don't lose money. You don't make anything, but at least you don't lose anything. You know what I mean? So you have to be able to manage your trades, as well as the fact that price then pops back right before your TP. If you were managing the trade and you had your trailing stop move from break even, and then you saw it go higher, we're now 40 pips, 10 pips away from your target, you then realize, okay, let me move this stop to 25 pips in, so that if it pulls back, I at least get 50% of my target. Or if you see that 40 pips in and you realize that it's getting a bit choppy, let me close. You walk away with some rands or some money in your pocket. You know what I mean? Because that's the goal here. Trading is not always gonna be automatic TPs and SL hits. Manage the trades because your analysis could be correct or it could be wrong. It could go your way and it pivot 50% on the way to your TP. Hell, even 90%. Literally a pip away and turns around. It happens. So you have to be able to manage the trade. That's beneficial to you. I know one thing that could definitely contribute to a trade pivoting a pip or two away from your TP is fundamentals. You analyze a certain pair to do a certain thing, and next thing Donald Trump picks up the phone and starts tweeting. And next thing Nasdaq goes into the red, and you've been bullish for the past 2 days. You're 100 pip up. Next thing, one tweet and it's shorts 500. It happens. It honestly happens. That's why you have to be able to manage your trades, because fundamentals, don't get it wrong, fundamentals can also help you. Fundamentals definitely also help you. I am 90% technicals, right? Fundamentals, I enter a trade once I've checked on investing.com, CNBC, Bloomberg to see if anything may come and potentially disturb it. For example, uh yesterday the ECB had a meeting where they were discussing interest rates, and I was short euro yen. And once the ECB started talking, volatility kicked in, and the trade went bust. The trade went bust. You know what I mean? It was shorting, it was going my way, and it wasn't at the point where I could put it at break even just as yet. And as soon as ECB opened their mouths, trade went bust. So it happens. And I want to speak about, the emotional weight of not understanding that don't get married to an analysis. You know what I mean? There's analysis and there's trading. If you analyze pound yen is going to go up and it goes up 20, 30 pip, and you start to see it getting choppy, close or at least put it break even. And if you see that it's actually going to short now, don't get married to your analysis. Okay? Don't be afraid to then change your analysis, get that little bit of pips and collect the fall, right? Because maybe it retested a previous resistance and it rejected. Go ahead and short. You might get 100 pip. There's no reason to get, married to your analysis. And it's that's what could potentially make you feel like you're not that great a trader, because you're always analyzing currency pairs to do a certain thing, and they're always turning around on you, or it's a stop hunt always. Learn to manage those trades. Okay, guys? I promise you. Learn to manage those trades for the month of June. Hit me up on Twitter, on Instagram, DM me, and let me know how it went when you start to incorporate managing your trades into your strategy. Don't just be one-sided. It's 50-50, guys. It's analysis and trade management. One other thing that definitely helped me in my trading was to make more money and to collect more pips was numerous TP levels, right? And this is definitely part of trading. This is one way that you can manage your trades is you want to plot different price points, right? Let's say the ultimate goal is to collect 150 pip on a pound dollar long move. You analyze that it's going to collect 150 pip, and let's say you put two take profits, right? You put one take profit at a 75 pip level, and then now you know that you have bagged some money. Maybe you have 3 trades, right, on pound dollar. You risk well, you enter at the same time, and then you wait. You say, okay, these two, I want the TP to be 70 pip up. And then those two close 70 pip up, and you wait for the other one to go the full 150. And you find maybe it goes 95 up and it starts to pull back. At least you let that third one, you let the third rest at the 75 or the 60 pip level, right? The trailing stop, that is. so that you walk away with some money and you see that could it go for the 150? Sometimes it will, sometimes it won't. It'll pull back after hitting 75 pip and go back down to your entry, but you don't want to put all 350 pip and not walk away with anything. You know what I mean? And this is for my novice and my beginners. Incorporate that into your strategy. And again, hit me on my DM and let me know how it went for you. And also keep in mind the risk factor when you start to plot your TPs like that, because if you're accustomed to one position, especially when you're learning, once you now, even though it's one currency pair and you start to open three positions, all three could hit SL, and you will definitely lose a lot more pips than when you had one position. So make sure that with each trade placed, you don't go over an amount that you would be uncomfortable losing. You understand? Because that is one thing that could start to emotionally weigh you down, is you shouldn't be risking 60 pips per trade. You should be risking 20. Take a look at your account size, take a look at your leverage, take a look at, because for example, you will find that a stop hunt will occur and the trade will go your way, but you've lost so many pips in the trade that you couldn't even re-enter. It's because you're risking too much. So you really need to see how much in comparison to your balance are you willing to risk on a trade. You don't want to risk too much on a trade, because when you're a trader, your number one thing is to manage risk. Okay, you want to manage risk. You want to have that in your strategy. You don't want to risk too much. You don't want to be uncomfortable when you're placing a trade. Look, I get it. I understand beginners. This is your hard-earned money, and you feel some type of way when you place a trade. Hell, even when you're an experienced trader, sometimes you feel that. But you don't want to ever feel like, if I lose this account, if I lose this trade, I'm going to be in the red. I'm not going to feel nice. You don't want to have that feeling when you're risking. That's definitely not the plot or the point when it comes to trading. So anyway, thanks again, guys, for tuning in to this episode 6. Thank you. I do hope you guys had a great week. I hope you enjoyed this episode. I hope you're enjoying the podcast. Leave me some feedback if you're on YouTube. Comment, Instagram, comment. Hit me up on Twitter and Instagram, Perpetualpips. That's one word, Perpetualpips, Instagram and Twitter. Search on YouTube as well, Perpetualpips. You can find the podcast basically anywhere that has podcasts, on all the platforms. I will see you guys in the next episode 7. That is wherever you stream it. And if you love this, share it with your friends and fam. Anyone who wants to learn, anybody who's into Forex. But yeah, thanks for the feedback that I've been getting on Twitter. A whole lot of you guys are excited when I post polls about who wants the episode. And, when I ask about how you guys are enjoying it, you guys give me really great feedback. And it's great to see so many of you guys excited for the next episode. That really gives me motivation to keep creating these, because I've been in you guys' situation. And to be honest, I've actually never heard of a Forex podcast before. So it's really unprecedented, at least for me personally. And I want this brand to really be there for you guys. Warrior mentality. Never give up. That's not an option. Trading versus analysis. Remember to manage those trades. And I will see you in the next episode. Cheers.